morning, good afternoon, and good evening to all. Myself Vaibhav. In our today's session of automated trading, we will be considering a new indicator. This is the rate of change of triple exponential moving average, and here this is basically it is a oscillator which we use to determine whether the underlying instrument is in oversold or overbought territory. Also, it can be used as a momentum indicator, so you can utilize it to gauge whether the momentum is on the upside or on the downside. And for our purpose, we will be mostly focusing on its momentum side, as we want it to help us determine the trend, and we are not really concerned with the overbought and oversold situation. Rather than that, we are looking to trade with the trend, and for that we will utilize this indicator, the TRIX. So let's get started. With that, we of course also utilize, most of them than not, we utilize the ATR, and today's session is no exception. We will be using ATR as well. Before we get started, here is a standard disclaimer. Here I would like to remind that this session is simply for the tutorial purpose, and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for many months, and allow it to run on the demo account for sufficient enough time. And nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for our day. So here I would try to explain to you the logic behind our today's algorithm. We are looking for the buy trade to happen when the momentum is on the rise, but we are not trying to gauge the overbought and oversold scenario. So we will not be looking when it has shown correction and it is deep in the trenches. Rather than that, when the momentum picks up and the TRIX value cross above zero, and then as long as it keeps rising, we will be looking for the buy trade utilizing 5 minutes chart, and for the sell trade, whenever the TRIX value falls below zero and it keeps falling below that, we will be looking for the sell trade with the help of 5 minutes chart. And on the 5 minutes we will actually be looking at the overbought or oversold scenario, and on the hourly time frame we are mainly concerned with the underlying momentum, and we will try to see how to optimize our entry and exit point. So it's a fairly simple setup. We are utilizing only single indicator for our purpose, and then we will bring in the ATR as well on the hourly time frame to help us see what kind of momentum is there in the instrument, and accordingly we will be placing our stop losses and the target price. So here, as you can see, the TRIX is rising, and now if we consider the ATR here is around 11 pips, so we can keep our stop losses in multiple of these hourly ATR, and later on the ATR goes on to rise and then again it falls, and here somewhere around 2 GMT of 26th May the ATR is even lower, around 8 pips. So this value keeps changing all the time, and we want to keep abreast of these developments, and that's why we are mainly focused on using this ATR for optimizing purpose and not as a guiding force for the side of the trade. So let's get started on our Visual J Forex platform, but let's consider what will be the setup. If we are looking for the buy side, then we will be comparing the last hour's TRIX value to the value 3 hours back. So we will be considering the TRIX with the shift value 1, and then we can utilize the shift 3 or shift 4. I think shift 4 will be better. It will smooth out a little bit of fluctuation which many a times happen. We will have some lag, but then we are also utilizing the 5 minutes time frame, so it will not be a much concern. And similarly for the sale trade, we will be comparing the last hour's TRIX value, and it should be less and it should be in the negative territory than the value 4 hours back. Actually, we are utilizing a combination of last hour and then 4 hours back, with the difference between both the candle of being 3 hours, and even that value should have been in negative territory. So with that, we will try to look for the sale trade, and then for the sale trade we will go and utilize the 5 minutes time frame. So let me see where on the hourly chart the buy conditions would be fulfilled. So somewhere here, even in yesterday's session, most of the time, I think even for today, we have this TRIX value pointing for a buy trade. So starting from 0 GMT of 27th May, we can look for a buy trade anywhere till today's session. So let us go on 5 minutes chart and see when actually we would be looking for a buy trade to happen, and we want fair bit of correction to have happened. So we need the TRIX values to have dived into negative territory, and then in the negative territory, actually it should start to change course and it should start to rise. So what we will do, we will be looking at the TRIX values over a period of half an hour. So we will consider last 5 minutes blocks TRIX value, and then we go back in time around 20 minutes 15 minutes back from last candle, and we utilize the shift value 4, and then again we go back in time and we utilize shift value 7, and then we utilize this combination of three blocks of the TRIX, and then we compare the value. So the last if we are looking for a buy trade, then the TRIX value of this 5 minutes candle should be in the negative territory, that is less than 0, and it should be greater than the TRIX value with a shift value 4, that is 20 minutes back, and that should be less than the TRIX value 35 minutes back, that is utilizing the look back period of 7 on the 5 minutes candle. So on the course of half an hour, when the momentum will start to shift from being bearish to bullish after having shown significant amount of correction, we will be actually looking for a fresh opportunity only when the new this reversal happens. And even in earlier session, as we have seen that starting from 0 GMT of 27th May, we could have looked for a buy trade. So let us see when would our opportunities would have arisen if we were utilizing our setup in yesterday's session. So somewhere here, as you can see, the value are falling and then it starts to rise. So somewhere here, the buy trade would happen, and then what will happen to our trade? It will go on sideways to a bit on the lower side, and then it will pick up the momentum and go on till here, and then it will dive lower, and it now depends on what kind of stop losses and targets are we are playing with. So suppose if we are keeping our stop losses and targets wide, then I think here it will not really hit the target price, and from our entry point it is dropping almost like 20 pips. So it depends on what kind of combination we are working with, but it could have gone either way. Even from the buy side, it is going first 20 pips up and then 20 pips down. So if you are playing with a 1-1 risk reward ratio, then I think you would have made money. If the reward was in multiple of risk, then I think the stop loss might have been hit. So either way, and then the next opportunity would have arisen somewhere around 17:30 past 17 GMT. So this is somewhere close to 1.098, and then if we had entered into a buy trade, then it would have gone on to bring in around 40-50 pips, and then again it goes sideways, and in this time Again the momentum goes into negative territory and then starts to pick up, and somewhere here the trade would again happen, and then after going 14-15 pips up, the momentum will again shift on the lower side. So basically we have to see what kind of target and stop losses we want to work with, and accordingly we will have to do. I think we should be utilizing the multiples of the hourly ATR, and that should be fairly good enough. So let's get started with our work, but we consider the buy side only even for the sell side. Let me explain to you the logic of the sell side as well. So here we want the TRIX value to be less than 0, that is in minus territory, and it should be falling. So the sell side trades would have happened anywhere starting from 14 GMT of 22nd May till around 11 GMT of 25th May. So this is 1 day's window, and in that sell trade would have happened if the 5 minutes condition were to be fulfilled. So let us see if our trading happens as we look for the sell side trades. And here is the okay. So I think we might have got some opportunities for short selling as well. Somewhere here we might have been able to go for a short sell trade, and that would have gone in the profit for around 20-25 pips, and then the momentum shifts, and then here I think by that time even the hourly momentum has changed and it is no longer in sell territory. So that's on the sales side. So let us build the algorithm, and then during the test runs we will get to see the much larger picture when the actual trading will happen and when it won't. So let us get started for our setup. First thing first, we will need to do the instrument subscription. We can work with the Euro USD, USD GP, or for that matter any other instrument as well. There is no restriction. You can choose any indicator which is supported by the Visual J Forex platform. So here we start our day, fresh setup, fresh trade, and we use on tick as the start point. And first thing we will need to do is get the default variable, the default instrument, and the default instrument is set at Euro USD. We'll keep it as it is, and we take on tick plastic tick instrument, and here comes the tick instrument again, second if block, and the default instrument should be equal to the tick instrument. The default instrument has been defined as Euro USD, and then the last tick instrument. Again we take last tick instrument here and we hardcode it as Euro USD. So here we got the Euro USD. Now we have to see that position amount should be 0. So we look for the position amount and it should be 0. So position info, all position, just to make sure there are not too many positions getting opened. and this should be equal to 0. And now is the time to bring TRIX. So here, indicators, momentum, I think it is an oscillator. Okay, here we go. We got this, and we will need a lot of TRIX blocks actually. On the hourly time frame, we will be needing to compare last hour's TRIX value to the value 4 hours back. That means both these TRIX blocks will have 3 candles in between, 3 bars in between. So we have to define it accordingly. And let us take one more here. And is 1 hour. Shift 1, last hour value, and then shift 4, 4 hours back. Time period will remain at 30. Now we have to bring in the 5 minutes candle. The TRIX, and here we go. Here we will utilize the combination of shift 1, shift 4 and shift 7 of 5 minutes each. So here shift 1, and let us color code this. Okay, now one more. Candle period at 5 minutes, and this will be shift 4, 5 minutes back, 20 minutes back and 35 minutes back, and one more, that is with shift 7. And here this is all set. Now we need to bring in the historical candle blocks to see what kind of momentum is there, and we will need info, get historical candle of 5 minutes, default. We will change this to 5 minutes, and it will be shift 1, and this we will use for immediate entry and exit purpose. So let us define these at 10 seconds. Shift 1, last 10-second candle close, and I think we should, okay, we will define these at shift 2. Okay, oh, we got it wrong. Pardon me. And this one again, 10 seconds. With bit side is alright. Shift at 2. Now we bring in the ATR, hourly ATR, which can be utilized as our entry and exit optimizing indicator, and it will be included in momentum, no it is not, oscillator, oops, okay, we got the ATR. Here we will define it at hourly time frame. We make it 1 hour each, and shift will be 1. Output value is line 25. Now suppose if we go with a risk reward ratio of 1:1, then we can simply utilize the ATR as it is. We just have to bring in the factor conversion, the type conversion factor actually. We will need to change the ATR output, which is in double format, to integer format, and since it is Euro USD, we will need to multiply it by 10 raised to the power 4, 1, and then we will get the stop losses and target defined dynamically. So we do that. We need to take the calculation expression here. We keep the ATR value as it is. We just multiply it by the type conversion factor, and we will get the results. So here we go, and this is line 25. We will utilize the ratio 1:1. Suppose if you want to change this, you can simply add one more variable and multiply it. Suppose if you want to double it, you add 2. If you want to make it half, you multiply it by 0.5, and if you want to triple it, you simply have to multiply it by 3. So it's fairly simple. Now let us create a new variable here, and as you can see, it is in double format. And today we will actually be dealing with the market open. We won't utilize the pending open. We will simply open the position at markets, whatever is the price prevalent at that point in time. So we type conversion factor, and it will be 1 followed by 4 zeros, that is 10,000. Okay, so we got it, and we do this multiplication a1 into a2, and the result of the calculation would be placed into the order block, the open at market block actually. So let us bring in those trading systems as well. We will need multiple action block first, and then we will need open at market. Open at market we will need later on. Now logical, we got the multiple action here, and then we will need to put we will need to create fresh variables here in the place of stop loss and the take profit, and then we will be putting these variables which will be in integer as the result of calculation, and then these double values will get calculated into the integer format, and then our stop loss and take profit, which would be in ratio of 1:1. So the stop loss and the target price would be equally placed from the point of entry, and that would be the setup. So let us join the multiple action block here. So the setup is fairly simple. We just have to compare the TRIX values, the current value. Actually, we are utilizing look back period. So more often than not, we are not actually working with the current value, just the value which was there one candle period back. So that's it. As the time is running out, we will try to finish our buy and the sell side in tomorrow's session. We won't start it today, as then we will have to leave it halfway. So rather than that, we start afresh in tomorrow's session. So that's it from my side for today's automated trading session. And if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Thank you for joining in. It was a pleasant day. See you tomorrow. Goodbye.